Kitco Mining's special coverage of the Vancouver Resource Investment Conference is brought to you by Snowline Gold.
Hello and welcome to Kitco Mining here at the Vancouver Resource Investment Conference with me, Paul Harris. We're talking about silver, and joining me today is Peter Krauth, author of The Great Silver Bull and editor of The Silver Stock Investor. Peter, welcome back to Kitco.
Always a pleasure, Paul. Thanks for having me.
Well, let's start by, we're at the start of 2025 here, so let's start by looking back to 2024. 2024 was a pretty good year for silver. The price increased substantially, although, fair to say, it did not catch up with the rise in the gold price. What is your view on how silver performed last year?
I was quite satisfied, quite happy. And, of course, you had miners complaining when silver was $22 and $20, understandably, because if you look at their all-in sustaining costs, they probably were right around that level. So profits were very, very thin, if any. But then from late February, you moved quickly, through to, I believe it was high 20s, $30, and eventually to $35, I think it was by October. Has, of course, pulled back. We're still around $30 now. But from, say, 22 at a low to 35, it's quite a good year, definitely.
$30 per ounce. How good a level is that for companies? I mean, you mentioned that sort of $20, their margins are very thin. $30, presumably they're a bit fatter. Exactly. Is that a sweet spot, or could they still do with having a few dollars more to be really comfortable?
They could. I think they could do with a few dollars more. There's some interesting research that and information really put out by the people at Silvercrest, so Chris Ritchie specifically. He talked about this, and he was saying to me that, internally what they had been doing was they were saying, well, it's all fine to say our all-in costs are, say, 22 or maybe even a little bit higher, but really you're not considering all sorts of things that you probably should consider. The acquisition cost for the asset, for example, they're depending on the asset and when you bought it and how much you spent to acquire it. These may be sunk costs, but they still, in a sense, they should be spread out over the number of ounces that you're producing. And if you have a mine plan and a study that shows you we're going to be producing for X number of years, so many ounces, then you can use take that cost of the acquisition and add it in there, and it pushes your price up. In some cases, it can push it up to $30 or even higher than $30. So they were being very conservative, and they said that they felt that you needed to be somewhere around $30. So I imagine, and they have a rich project, a high-grade rich project that's very profitable. So you have to imagine that projects that really don't have that luxury, they're if you have all-in sustaining costs and then you include things like the acquisition of the project, then you could be even north of that. So I think we need, and we're going to get there, we need to be in mid to high 30s and even into the 40s. And then these companies are really going to start to get comfortable with, I guess you could say, reasonable profits. But what I will say is that, not everyone, but I think because of what we've lived through since sort of the 2013 period to the 2016-17 period when things eventually bottomed, was because in that cycle, that upcycle up until 2012, 2013, some large mining companies were too aggressive, and they bought things too expensive, and so they've reversed completely. They've maybe become too conservative now. And so I think that they'll feel like they need to see silver stay in the $35, $40 range and be there for a while before they really start to flip to the other side and become a little bit more aggressive like they should.
Well, I think that's an interesting view, Peter, because last year we saw some big silver M&A. Not necessarily a great amount, but there were some big deals. Notably, Gatto Silver being acquired by First Majestic Silver, Silvercrest, who you just mentioned, being acquired by Core Mining. Arguably two of the sort of biggest and best development assets snapped up. Will there be more appetite for M&A this year?
I think so. I mean, we've talked about this before. The silver market is very, very tight. It looks like silver mining peaked back in 2016. All the research I've read does not show any kind of meaningful growth at all in silver, mined silver supply, which is incredible when you think that we have a 20% deficit every year. So where's the silver going to come from? And these producers. So like you said, we've just talked about two of the bigger names in silver mining, silver producers. But they're not replacing reserves. They're not doing it through exploration. So the way that they're doing is they're going out and they're buying existing producing assets, and they've bought arguably two of the best assets. But if you go down a notch in terms of producers, or even if you go up a notch in terms of producers, many of them are still really not spending all that much on exploration. So they're going to have to look down the food chain. And I think we are going to still continue to see, maybe not quite to the same degree, but I think we are going to see some M&A continue. I think it's pretty much inevitable. And they don't have the appetite. Some of it I really understand. It's difficult to find economic deposits, especially silver, high-grade silver. Then it takes forever to permit them, build them, finance them, and all of that. And even if they maybe overpay a little bit, the risk is so much lower to just go out and buy existing assets that have good reserves to go and restock basically on the reserve side.
As you mentioned, Gatto Silver, Silvercrest were two of the standout assets that were acquired last year. They were both producing assets. Right. There aren't a great number of assets in the silver space to begin with. So if companies are looking for more M&A, where are they looking?
So I think they're going to look a little bit, like I say, a little bit further down the food chain. These were good-sized producers. I think they're going to go a little bit smaller. And I think they may even start looking at the developers. So go to mid and smaller mid tiers, and then actually even go to developers. There are some really interesting projects out there. Some of them are actually held by producers. I think that the producers that maybe feel confident in terms of jurisdiction are going to try to move their projects along faster so they can get more silver into production. But the ones that maybe don't have that luxury are gonna look at good-sized development assets that have a good shot at relatively short-term timeline to production.
Of the developers, there are a couple of names that stand out as having very large silver resources. And of course, there I'm thinking of Discovery Silver and Vizsla Silver. They're working towards getting towards feasibility, presumably eventual construction decisions. But each of them are sitting on very large resources. Does that scale sort of change the sort of dynamics of things at all?
The scale, you mean?
The scale of those projects. I mean, let's say we Gatos and Silvercrest, they're right. Sort of 10 million ounce a year right. Silver equivalent producers.
Exactly.
Vizsla and Discovery are looking at almost multiples of that. Right,
exactly. So that's a good point, because that's a lot to it's a big bite to take on and then to start to move forward. So that would actually take a bigger silver producer, or those projects may, because of their size, actually only go through the normal course and be developed internally. That's something I could see. Some of them maybe more digestible projects, things like New Pacific has Carangas, for example, or Silver Sands, two really very interesting projects that are a notch lower in size, and I think realistic for another producer to take on and permit and move forward. So you're right. I believe that size is going to be an issue, and there's going to probably be more of a sweet spot in terms of size. It may be somewhere around couple 100 million ounces that will be more digestible, let's say, for a producer to take on.
Okay. Now, Peter, you spoke a little bit about some of the drivers in the sector in the past year and coming into this year. One of which is, you mentioned that the silver production is declining. At the same time, industrial consumption is increasing. So you've got that supply-demand dynamic in play. Do you see that continuing throughout this year, and what impact, if any, do you think that will have on price dynamics?
So It's really interesting when you look at what has happened with solar in particular. So the growth of solar has just been, I'm going to say, almost exponential over the last maybe 3 or 4 years. About 5 years ago, it was 50% of, it's grown. Industrial demand overall has been about 50% of overall demand. Now, if you look at industrial demand, in large part because of solar, it's actually moved to about 60% of overall demand. Solar itself, as a subsector of industrial, actually represents 20% of all silver demand. So, to this one single application, it's very possible. I think odds are high we're going to go into a recession. You've got arguments both ways, but I do think we're likely to go into a recession. I think that the growth of the demand from solar could slow. I think we're going to continue to see growth in demand and in solar installations, but that rate of growth, I think, will slow a little bit. It's just been so strong, so aggressive. And then on the other hand, if you look at some research, it tells us that since, say, 2010, if you looked back every year from there and you looked at the 5-year forecasts, the installations of solar panels have been 3 times what the forecasts were on average. It's just been, we've underestimated in a tremendous way the amount of solar installations, and that is really what has driven the silver demand. So even if we get the rate of solar installations slowing a little bit, I still think we will see growth that will continue to push silver demand from that side higher. But then you've got things like data centers. They've been growing pretty dramatically. AI demands a lot of power. The large tech companies, names like Microsoft, Apple, Meta, they've actually started to look at nuclear to help power their data centers. I think I read that Microsoft was going to commit something like $80 billion to having their own data centers. Huge numbers. So, big boys like that can look at something like nuclear because they can turn to the odd project that maybe is not at full capacity or has been dormant for a while, so to speak, and they can go back and restart some of those things. But I think, that's sort of for top tier companies. If you look down a notch, I don't think it's realistic for some of the others, a little bit smaller, to look at nuclear necessarily. If they want to be self-sufficient and off the grid, so to speak, I think that solar makes a lot of sense for them. It does take room if you're going to build out a solar farm. It's more socially acceptable for now than nuclear. It's fast to permit, it's fast to build, and then you're self-sustained with that in terms of energy. So I think that it's easy to look at solar and ask, is it going to slow down significantly? And potentially, but then you still have these other drivers. And then you have the demand side from investment. And I think that's really the wild card. So it's interesting that if you compare the numbers from the Silver Institute going back to April of last year, which they revise usually in November. And so if my memory is correct, in April, so they don't include investment into silver ETFs. They have that as a separate line item. So if you look at the market balance, they said there would be a deficit without including that of about, I think, 215 million ounces. And then when they revised in November, they said, the deficit's going to be more like 180 million ounces. And I think that mostly came from lower physical demand for silver. But then when you added in the investment into silver ETFs, the original number in April was 50 million, and that doubled to 100 million ounces going to silver ETFs. And if you included ETFs in the overall balance, the net deficit for 2024, and so we don't have those numbers yet, but their forecast was that it was going to be something like 280 million ounces. That will be the second highest year on record. So investment demand is really a big factor. And, I look at the numbers. I've seen the number of ounces held by the largest silver ETF, SLV. Since July of last year, we've seen ounces held by SLV start to climb again. So we do absolutely see the funds flowing there and the demand for physical silver from these ETFs kick in again.
Thank you, Peter. You've just captured, let's say, the bipolar aspect of silver. You've got the monetary aspect, you've got the industrial demand aspect. As 2025 gets underway, which do you feel will be the sort of predominant theme this year, the industrial or the monetary aspect?
I do think it'll be the monetary. I really do. I like to say that the industrial side of it is more predictable, and so it helps to provide a rising floor under the silver price. And it's the investment that demand that ebbs and flows, and it really, it can go away and it can really get quiet for a while. But when it comes back, as we've seen before with the silver squeeze in early 2021, it can come roaring back. I mean, silver or bullion dealers had many of them said they had never experienced anything like it. Their phone systems were crashing. Their online ordering systems were crashing, and they knew that it was retail because most of the orders were really, really small amounts of silver. And I think that the conditions are ripe for something like that to happen again. Something to keep in mind is that as industrial demand has grown and starts to account for more and more of the silver supply every year, that's allowed to happen, or that happens in a, not in a in a bit of a closed system where there are only so many ounces available. So the balance of that means that there are less ounces available for investment. So when investment demand comes back, and now industrial is steady and growing and has taken more of the silver every year, you've got a smaller amount of silver left for the investment side. And I think that when that really comes back in a big way, I think that odds are pretty high that we're going to see something like that happen this year. And that can really be a wave that will almost spike the silver price. So I think that's really something for investors to watch.
For silver investors, I imagine that's a positive out there in the future somewhere, whether it's this year or next year or whenever. What I'm referring to, you called it a spike. The silver price goes exponential during its cycle. That's yet to come. Silver outpaces gold when that happens, and that's when a lot of investors really make some terrific gains. What's your view? Will this year be the year that happens?
I don't think we're going to see sort of the ultimate mania spike. I think that's a few years off. But what we certainly have seen, and as I said earlier, that the last year was a little bit of an example. From February at $22 to October at $35. If my math, is correct, it's somewhere around 40 or north of 40% in a matter of, let's say, 6, 7, 8 months, which is pretty tremendous. And then when we had the silver squeeze in early 2021, I can't remember the numbers exactly, but that was really a really rapid run up as well. I think we could see something similar to that this year, but I don't think we're going to see sort of that mania phase spike that, honestly, I think will bring us into triple digits in terms of the silver price. I think that's a few years off.
When the silver price does run, does it lift all stocks, or are there certain stocks that benefit more from that than others?
So from what I've seen is that all of the stocks do benefit, but they benefit at a different time. So what I remember seeing with the silver squeeze back in 2021 is that initially it was the larger producers that really moved. And I remember numbers like, some companies saw their share prices up 70, 80% in a matter of a few days. This was the larger ones. And then some of the juniors were up a couple 100% in a matter of a few days. Volumes were up 7, 8 times normal. Again, just incredible numbers. But I had told my subscribers at the time, I said, look, this is not a fundamentally driven rise. This is a sentiment drive. And so don't expect this to last. Feel comfortable taking some profits. This is not going to stay. I think that, that sort of true big run-up is going to be, as I said before, several years out. But it is first the producers, and in that order, then the smaller producers, the developers, and the juniors that you see moving. We saw that last year without a spike. It was absolutely the producers and this was before the M&A activity, which I think took place kind of in September. We saw it was the producers that moved early in the spring and through the summer, and then we saw it trickle down eventually to the smaller names.
The universe of silver companies is relatively limited and compact. Which of the names attracting your attention and why?
So I'm going to say that if you're looking at either near-term producers or existing producers that are not the largest but have some really good room to move, two names I like are Aya Gold and Silver. They produce in Morocco. They just completed an expansion that's going to quadruple production. This is not something you hear often, and this is a pure silver mine, a true rarity in the space. You've got Skeena, Gold and Silver, which is in the Golden Triangle, and they're moving towards production. That's going to bring, I don't remember the number exactly, but that's going to bring a significant number of ounces of silver on a yearly basis when that eventually makes it to production. So these are two names to look at carefully. When you move down the food chain, you mentioned Vizsla earlier. I certainly like that. There are names like a company that really just a few days ago put out some fantastic news in terms of maiden resources. This is Suma Silver. They have two projects. One is in Nevada. It's the neighbor, actually, right across the highway from Blackrock Silver's Tonopah West project. So this is called the Hughes project. They have over 40 million ounces in their maiden resource. And then they have another project in New Mexico called Mogollon. And this one is in the 30 or so million ounces, all high grade, all tremendous room to grow. I think this is really a sleeper. This is one that people can feel confident looking at. Again, high grade silver, fantastic jurisdictions, lots of room to move.
Okay, let's wrap up by looking at the year ahead. Peter, how are you looking to play the silver space this year?
So I do think in terms of prices, I think that we could actually see silver regain $35 by the second quarter or before the second half starts of this year. And I think conservatively, if that happens and we go through, I think that economically things are getting a little iffy, and there's odds of recession. The Fed is really being squeezed right now. They're talking about, or the market thinks that they're going to pause. I think that actually puts them in a really tough spot, because if they do pause and keep rates high, that's going to really work against massive government debt, where we see that interest payments are becoming a top item and contributing tremendously to the deficit. They can talk about ignoring it, which they say that they do. I don't believe that. I think that there's going to be a lot of pressure on them to continue cutting rates, and that eases the burden for government. It eases the burden for Wall Street, Main Street, and everyone. So, if you see that, and you see that in the face of continuing high inflation, then that really kills the Fed's credibility. And I think game on for silver and for gold.
Well, let's hope it's a good year for investors, gold, silver, whatever. Peter Krauth, thank you very much for joining us today.
Thank you, Paul. It was a pleasure.
And we have a lot more to come from the Vancouver Resource Investor Conference, so hit that subscribe button. I'm Paul Harris, and this is Kitco Mining.
Kitco Mining's special coverage of the Vancouver Resource Investment Conference is brought to you by Snowline Gold.